But based on my experience, extreme pessimism often present some of the best opportunities for the investments. Just think back to March 2020 when the lockdown was announced, market initially tanked completely. But what followed? A massive rally. That's how market works. It's always very cyclic, where downturns are often precede recovery and the growth. Hello, my name is Vikas Agrawal and I am the founder of AIF and PMS Experts India. What we have observed is that there are more than 90% of the viewers in our YouTube channel who have watched our video and have been watching our video continuously at the regular intervals, but have not yet subscribed to our channel. So my submission to all of you is that please subscribe to our channel so that we can reach out to more individuals like you and spread the awareness about the whole investing game. Thank you so much. Hello friends, my name is Vikas Agrawal and I am the founder of AIF and PMS Experts India. Well, today I am here to talk to you about markets. I am sure all of you are keen to know about what's happening in the markets. Especially in the last 6 months, we are witnessing huge volatility. So we find ourselves in a moment of heightened uncertainty and there is a significant pessimism in the market. But based on my experience, extreme pessimism often present some of the best opportunities for the investments. Just think back to March 2020 when the lockdown was announced, market initially tanked completely. But what followed? A massive rally. That's how market works. It's always very cyclic, where downturns are often precede recovery and the growth. Let's look at the closer look at the current downturns. What is the logic? What is the reason behind it? Well, there are a couple of reasons. One is slow earning growth. Since Q2 of last year, that was the major concern in the market, contributing to a decline in the market sentiments. GDP growth, what was expected was about 8.2%, and we saw the actual reality, which went down from 6.4% to 8.2% to 6.4% in 2025, which impacts the investors' outlook. Third, RBI's hawkish stance on the interest rate, along with the liquidity deficit in the market, another factor waiting in the markets. The fiscal deficit target that was reduced from 5.6% to 4.8%. But such a steep cut could reduce government expenditure and critical driver of the post-pandemic growth. Slower than expected capex due to election-related delays in another concern. And last but not the least, falling consumption is a concern. A lower consumption spending affects the overall business and the overall market sentiments. However, here is what we think have already started to change. So the first thing is, when we look back, the Q3 earnings was very supportive and has come in a better than expected, signaling that the corporate India is handling these challenges better than anticipated. The government has ramped up its capex targets. Initially they took the target of 11.2 lakh crores which was allocated, and this year they have increased the same by 10%. So they have ramped up their capex targets. To support the consumption, government has also come out with tax rebate directly benefiting the middle and lower class income. The RBI has also done a lot of work in terms of easing the liquidity of 25 basis point report that rate cuts and planned open market operation, which is called OMOs, which should improve the liquidity further in the next 3 to 6 months time. And last but not the least, the crude oils are also softening, and with the potential resolution with Russia and Ukraine conflict, the inflationary pressure may also ease further, because last year we had this major headwinds coming from the global economies. Looking ahead, while volatility may continue in the short term, but the market is expected to stabilize towards the end of Q4 2025. This is what we believe. And domestic consumption is in the verge of revival. The favorable monsoon could further boost growth. By second quarter of the 26th, the impact of the government initiative and improved consumer demand should be more visible. The key concern is a lot of people are really concerned about FPI's outflow. While there is no denying on the fact that FPIs have been the net seller in the last 6 months, and the total assets, the stocks that they've sold is in the tune of more than 2 lakh crores. But going ahead, it is expected to turn positive, supported by higher capex, the tax rate cut, and the revival of consumer demand. What I strongly believe that the food inflation is a major concern, but it has already started easing now, dropping from 10.9% in the October last year. It has come down to 6%. Combined with the RBI's rate cut, the liquidity is expected to improve, and overall it will further support the economic growth. And couple of measures which have been taken by Government of India in terms of cutting down the tax, the infrastructure spending, this will, I think, believe that will lead to a stronger economy, because 1 lakh crore income tax has been already passed on to the middle and lower class income, to the consumer in their hand. Because government used to believe that only it used to be a capex led growth, but now they are talking about capex plus consumption led growth, and increased religious tourism boosting the domestic spending. I'm sure you have seen how many people visited Mahakumbh this year. And on top of that, government has increased their corporate government capex and allocation to the coming fiscal year. Despite global uncertainty, India's growth outlook for 26 appeared to be more promising than 2025. In fact, India's geopolitical positioning, along with the soft crude oil price and increased technology transfer, will help mitigate the impact of potential US tariffs, which Mr. Trump is talking about, ensuring the country remains well positioned for the growth. In conclusion, while the short-term volatility is possible, India's medium to long-term growth looks to be very strong. With the government support, easing inflation, a revival in consumption, and recovery in FPI's inflow, now is an excellent time to invest in an attractive valuation, which are presenting an opportunity to capitalize in the coming recovery. Let's stay focused and be patient. This is an exciting time, and take the advantage of the opportunity ahead. Thank you for your time. I look forward to navigating this promising phase with you. To know more about it, please reach out to our team of experts at aifpms.com, and we will share the complete house views and share all the data points which are indicating the market seems to have bottomed out, and I think it's a good time to enter into. With that, I'll conclude my remarks. Thank you.